This is The Future Of, where experts share their vision of the future and how their work is helping shape it for the better. I'm David Carston.
And I'm Celeste Furry. Last week we talked about climate anxiety. This week we look at real action happening to tackle global warming and achieve a low carbon future. The green transition is not only an environmental necessity, it's an economic, geopolitical and technological race. Australia's success depends on how well we can align policy, industry and innovation. In 2025, the GreenTech Hub was launched by Curtin University, Chevron and the WA state government to fund and fast-track green tech.
Joining us today is GreenTech Hub Director Jason McFarlane and Desire Runganga, an engineer, Curtin PhD student and matter expert at the Hub. We discuss the Hub's exciting work and explore what it actually takes to decarbonise at scale in Australia and around the globe. If you'd like to learn more about our guests, you can visit the links in the show notes.
Jason, about 10 years ago in 2016, 195 countries signed the Paris Climate Agreement and committed to keeping global temperature rises well below 2 degrees Celsius. If Australia could get a score out of 10 for how well we've actioned that commitment, what would your rating be?
That's a really good question. The short answer is we've got a pass mark to 2030. So we're around 45% of the way to, I guess, in terms of time towards to 2030, and we've succeeded in spending around about 45% of the carbon budget that's, I guess, been allocated to us through the Paris Agreement to 2030. However, in terms of 2050 and actually achieving our targets, the 2030 targets are actually the easy bit. One would argue that the commitments we made and the commitments that were made by most countries were pretty unambitious, and that really anticipated an exponential shift in I guess reduction of carbon consumption or carbon emissions post 2030, particularly into the 2040s and beyond. So whilst we're doing okay now, I think it's pretty reasonable to argue that we're really not even at the starting point yet, and that there's an enormous amount of work to do in the coming years to really even keep track with the commitments that we're making.
Globally, Jason, the emissions were, according to the agreement, supposed to peak in 2025 and then be on the decline to the tune of 43% by 2030. Globally, how are we tracking?
I guess disclaimer from the outset: I'm certainly not a climate scientist, but I guess from the media, it's clear that emissions are still on the rise. That we are still experiencing, I guess, the introduction of carbon well beyond what we anticipated, and that I guess we really haven't even started in the true journey towards a net zero economy as yet.
A sobering start. Desire, the US is the world's second biggest emitter of greenhouse gases.
Yeah.
They've exited the Paris Agreement earlier this year. What kind of message does that send to the rest of the world, and does it send efforts to combat climate change backwards? I mean, we've just heard from Jason that we're not tracking that great. The US position, what does that mean?
So I think I tend to agree with Jason, and my answer wouldn't be a yes or no in terms of whether it sends us backwards, but my straight answer would be we were already struggling even before the US exited. And I'm going to respond to, because I specialize in mineral economics, so I'm going to respond to this question using a critical minerals perspective, which are really the ingredients of the transition. So if you look at minerals like lithium, cobalt, rare earths, these are minerals required for electric vehicles, wind turbines, or batteries, right? And for us to be able to transition, we need to increase our production of these minerals by between 300 and 800% from what we have currently. And what we are seeing currently, or based on what we're producing currently, we are likely to actually have a degrowth in terms of that production, and go down to about negative 30%, or at best, we're going to increase our production to about 80%. So that gap between 80 and 800%, now to bridge it, we need about 600 billion. So I would actually call your question a $600 billion question, because we need $600 billion to invest in mining countries. So in Australia, in Southern African countries, Latin America, and parts of Asia. And traditionally, this finance has come from Western countries, the US, and particularly the US and some European countries. So yes, indeed, the US exiting the Paris Agreement has an impact. But the reason why I say we were already struggling is because it became clearer that we needed critical minerals for the energy transition, and almost acknowledged widely around 2010. And since 2010 to January, when the US exited the Paris Agreement, we didn't have a plan as to where we're going to get that 600 billion. Some might think that we're supposed to get that 600 billion from climate finance, but climate finance has got its own objectives, which are primarily targeted on adaptation. And if you look at how much we are also raising in terms of climate finance, you end up seeing there isn't much actually to draw from there, because from 2020 to 2025, we were raising about 20 billion a year, 20 to 80 billion a year, against a need of 2 to 5 trillion. So then we can't really get that 600 billion from climate finance by 2040. And then you have multilateral banks. They can't really finance the mining industry because of the carbon profile of the mining sector. And also they can't do that because the mining industry is generally risky. So at the end of the day, we don't really have anywhere we can get the 600 billion we need for the mining industry.
So the paradox there is, you're saying that that critical minerals are an absolute must for the energy transition, yet finance is difficult to come by because of the emissions profile and of the activity of mining those critical minerals. That sounds like a stalemate, doesn't it?
Yeah, it does. It is indeed, and that's essentially my PhD, and where I'm trying to see how do we get about this stalemate and raise the finance that is needed.
Why did the US leave the agreement?
Yeah, based on my research, you would realize that. So in my research, we track US policy from 2017, and we look at critical minerals submissions towards policy making in the US. It's about, I think, close to 1,500 submissions that we analyze. And when you analyze those policy submissions, you can already see that there is the sentiment that globalization is not helping us. So in as much as now you have prominent leaders saying it, it was actually in policy submissions around 2017. So yes, there is a strong push from citizens and, people that are contributing to policy making, saying, these multilateral institutions are not really helping us. So I think that would be the short answer, that citizens think that multilateral institutions are not helping them.
It's interesting that you have the politics of I guess the US and in different parts of the world, that you're sort of seeing a little bit of systems pushback against transition and against change. But the economics hasn't changed. And what we are seeing and what we've hearing anecdotally from colleagues and collaborators in the US is the reality of the economics of solar and solar deployment, the reality of the need for long duration energy storage and energy storage solutions, the reality of the need for mass rollout of transmission to underpin economic development hasn't shifted. And so what you're actually seeing is that there's quite a disconnect between the investment environment and what the market's looking for in the US and what the politicians are saying. And that's sort of playing out, particularly as data centers and new demand is being sort of really ramping up the need for alternative solutions. The reality is, regardless of what the politicians are saying, you're not going to meet that demand through coal-fired power. You're going to meet it through renewables because the economics make sense. or renewables or nuclear, and so low emissions, I guess, energies. So there's kind of a disconnect and a shift in focus that even what you're seeing the underpinnings of from the Trump administration is they still are investing in lower emissions technologies. It's just not necessarily so public facing.
Look, before we talk about one part of a possible solution that's happening here in Western Australia locally, Desire, I just want to get back to your research. I'm very interested to know what you found out about what some of the possibilities, what some of the solutions could be in terms of that financing paradox that you mentioned earlier.
The problem is bigger, based on my analysis, I think the problem is bigger because what you essentially have is you have actors with totally different interests. You have mineral producing countries and mineral consuming countries on one end. On the mineral producing countries side, they are interested in stable supply chains, affordable and security of supply, right? And then mineral consuming countries, that's why you have the US, most Western countries, they're interested in stable supply and supply security. And then mineral producing like Australia, Canada, most African countries, these are interested in sovereign capability, development space, and value addition, right? So when you look at this, you start to see that it's less of a supply problem, it's more of a bargaining problem. So this is where we sort of introduce the perspective we're introducing our solution from, that the problem is not supply. If you're looking at nickel, for example, there is oversupply. So it's not a supply and demand problem per se, it's a bargaining problem. Now, if you start to think of it from a bargaining perspective, and if you're familiar with the theory of games, there are two very important things that you need for you to be able to have an efficient solution. You need a platform, a credible platform. So if you're talking about a platform, you need a multilateral platform that is credible, that is trusted by everyone. And the second thing that you need credible rules, right? So currently we do not have either of the two. We don't have a credible platform. We don't have rules. What we have instead are three things. We have about 30 international organizations that are working on critical minerals. Around 2010, we had only around 10, and they increased to 30. And none of these, are regarded as credible by the people, that international experts that we have been interviewing. And then the second thing that we have is we have too many ESG rules. So ESG stands for environmental, social, and governance. We have about 25 frameworks now from 10 in 2010. And then we also have two sort of parallel financing rules, what I would refer to as Western financing rules, and then Sino financing rules. Very different. Western around 7% interest rates, and then Sino rules around 3% interest rates. When you have this system like this in game modeling, what happens is actors sort of optimize their benefits unilaterally. So no one wants to work together with anybody. And at the end of the day, collectively, what you have is losses for almost everybody. So I would give an example of nickel again, where you have Indonesia working with Sino rules, and then you have Australia working with Western rules, right? And then Indonesia manages to produce nickel at a cost of production as low as $3,000 US per ton, and Australia's production costs are around 18,000, right? Automatically, Australia is kicked out of business, and in a way, Indonesia still suffers because it has to carry the environmental strain, because 3,000 per ton is not capable to cater for the environmental damage that it's causing. And if now you look at China, it's now becoming what we would refer to as the victim of free riding in game theory, where it's the only financier and everyone is relying on it. So everyone is benefiting from it being the only financier, and long term, there might be consequences that they are going to have to face because of doing that. And globally, and particularly for Western countries, what you have is supply chains are now concentrated, so everyone at the end of the day is losing because we can be cut off by China or Indonesia anytime. So at the end of the day, collectively, we are all losing.
So that's where we're at. But how do you propose we level the playing field?
Well, we need those two fundamental things that I said are needed for bargaining in game theory. We need a platform, and the advantage that we probably have, it's probably an easy fix when we think of a platform, because we still have the World Trade Organization, the WTO, which has got some residual credibility. The US is still in the WTO, and China is still in the WTO, and most mineral producing and consuming countries are still in the WTO. And then the second aspect, of course, is rules, right? So like I said, we don't have credible rules, we don't have comparable rules, we don't have science-based rules. Everyone is just coming up with their ESG standards, but what's the best the baseline? What's the benchmark? So what we need to start thinking of is, how do we come up with evidence-based scientific ESG rules? So yeah, that would be the two things that we need.
Jason, to help WA make the switch to green energy, GreenTech Hub was set up last year to support commercialisation and technology. Can you tell us who is involved with GreenTech?
Sure. We're obviously a relatively nascent program. We're a state government initiative. We're one of the state's 5 innovation hubs. We're hosted by Curtin University, but essentially set up through an agreement between the Gorgon Joint Venture and the state government to focus on low carbon technologies. And with a real focus on looking for ways that we can leverage Western Australia's diverse industry, diverse communities, diverse networks and environments to accelerate high impact technologies across decarbonisation, the circular economy and biodiversity enhancement.
And what are some of the projects currently in development that you're really excited about?
The primary way that we're, focusing our program is through what's called innovation challenges. And what innovation challenges are is when we go to the market first and try and identify what the sorts of problems that Desire's just describing, the wicked problems that require innovation. And so that might be everything from particular, technologies and storage, for instance, around battery storage or energy transmission, but right through to the systemic challenges that prevent adoption. We look to scope and really identify profile what that challenge looks like, and then push that out to the global innovation market to invite entrepreneurs from all over the globe to come to us with solutions. What's so interesting is you sort of always enter these kind of conversations with a bit of trepidation. We've had industry judges who are essentially the people assessing these technologies. It's not us assessing, it's the sector. And you're always a bit worried that they're going to yawn and sort of say, I've seen it all before, yeah, great, thanks. But what we've actually seen is the opposite. The industry have really engaged with the challenge. We've had just some amazing feedback from industry that, the judging process was some of the best days they've had in years in terms of sort of being inspiring and really kind of, opening their eyes to what's going on. And I guess within that space already, even through the judging process, we're starting to see some of these technologies develop relationships with industry judges to explore opportunities for progressing their technologies right through sort of late stage piloting, even commercial deployments in the real world across Western Australia. So really quite excited about that.
Jason, what does make the WA context unique?
We're such an interesting market for a lot of sustainable technologies. I won't use the word that someone used the other day because they didn't use stuff, but the observation is we break stuff. That across Western Australia, our kind of, our remote context, our different environments, we're pretty rugged, and it's a good place to deploy and really test something in a pretty robust real world context. We obviously have a really strong industry base, and industry that is on the bleeding edge of, the climate kind of, energy transition. The scope, particularly as we start pricing in scope 2 and scope 3 emissions, and we do start to see systems starting to really seek solutions, a lot of our industries are very, very vulnerable. And so we've got a lot of opportunity for early adoption. And I guess the other thing in that is we've actually got deployment opportunities at different scales. So as an example, for this long duration energy storage challenge, a lot of our technologies, they've got the ambition to be a 50 megawatt, 100 megawatt plus long duration energy storage solution that might provide a solution over weeks and months. But really what they're at the moment is 500 kilowatts, 1 megawatt. And that's fine. That's where they are on the development journey. What's interesting about WA is we can probably find them a 1 megawatt customer that across the state, within various contexts, remote communities, various agricultural precincts, whatever it might be, that we do have the need for solutions of what is actually a commercial scale for these technologies as they develop. So we not only are sort of, I guess, in a lot of cases, what the market's asking for is these technologies to somehow jump from 500 kilowatts proof of concept through to a 20 megawatt solution. What we can actually do is help these technologies find a commercial path where they don't have to dilute their equity and actually generate revenue and prove themselves up in the real world at appropriate levels of scale to get them to where they need to be. So I think that's a real opportunity for us. I think both Western Australia, but actually Australia more generally, we have the opportunity to be a real deployment partner for green technologies, that we don't have to necessarily invent it, but what we can do is test, trial and scale tech. And I don't know that we value that as yet. And that's something that really, really excites me.
How can we get companies on board with going green with their growing profits and objectives that they have to meet?
The systems change that's coming means they have no choice. The reality of mandatory reporting, which is just starting to come in in sort of the last 12 months and really is going to roll out over the next few years, means that there'll be a light shone on the genuine carbon footprint. And we're already seeing ACCC be quite rigorous in enforcement of the integrity of those reports as well, which is fantastic. So we're starting to see an accurate reflection of impact, not only with Scope 1 emissions, but also Scope 2 and Scope 3. I think the other thing is that we've only just got to look at the last couple of weeks and the vulnerability of a lot of supply chains and a lot of operational activities to a shock in not only the price, but the supply of diesel. We've actually seen a mine site in WA actually have to close and send the workers home because they can't get enough diesel onto site. And all of a sudden these shifts, I think the business priorities, if I was sitting on a board and we're starting to do the sort of annual risk profile of the company, we need to start to take into account our vulnerability to price shocks, our vulnerability to reputational damage, our vulnerability to simply, I guess, losing sort of an early adopter advantage that comes with, I guess, operating in this environment. So I think that the mechanisms are in place. We will see some laggards, but I think the other piece there is we as consumers and we as, I guess, regulators and policymakers need to incentivize and shine light on the people that are adopting and the people that are kind of, I guess, really seeking to push the boundaries of what's possible in our context.
I guess working with the GreenTech Hub, one thing that I've learned is that industry is not going to just move from fossil fuels to the alternatives because they are told to do so. They are going to do that because the alternatives are economically viable and they are technically sound. So I guess what we need to do is, of course, to invest in platforms like the GreenTech Hub, so that we test and deploy and demonstrate that these technologies are actually technically feasible and economically sound here in Australia, and then we can sort of scale globally.
I mean, I was going to say that when you're talking about that in an industrial context, that makes complete sense. But as Jason has just pointed out, in the last couple of weeks, we've actually seen consumer demand having a very real say as well. Even in the context of office chat, you're hearing people actively searching out public transport as an alternative to driving their cars. This is where the rubber hits the road, consumer-wise. So that's also been. Is that also, I guess, one part of the equation? Consumer demand, does that play into these decisions at all?
it kind of sort of gets me back to critical minerals. There's widespread talk about ethical sourcing, and one of the issues that has been topical is what's the demand for ethically sourced critical minerals or products that are developed from ethically sourced critical minerals. And I think the last time I checked, the statistics were around 15%, if I'm not mistaken, which is okay. But I think the problem again is not simply demand, but or what consumers are saying, but it's also in terms of how do we make the ethically sourced products, or these products competitive in terms compared to other products that are not ethically sourced. So in the same way, we're saying how can we make energy ethically clean energy competitive with oil energy derived from oil and gas.
That's something I guess we have a conversation a lot with the innovators about is, and it's certainly played out in markets all over the world, is that the market won't necessarily buy a low carbon product. They'll buy a product which is cheap. And so whilst we're very interested in focusing on the impact and the footprint associated with a technology or a solution, the reality is, say, for long duration energy storage, that has to compete with a tanker diesel out in the bush, or that has to compete with a gas cogen plant, which is really how we're really dealing with that need right now. So project economics becomes really important. You don't have to meet it quite yet, but you have to show that you're going to be competitive in that space. And part of that as well is societally, we've got to price in the impacts of the higher carbon technologies ultimately in one form or another, so that we can bring the price down of these alternatives. It's not just about making the alternatives cheap, it's over time increasing the cost. And at the moment, a lot of our fossil fuels are subsidised quite heavily, systemically, both with nationally but also internationally. And over time, we have to, if the systems change to work, we actually have to start pricing in the impacts of those technologies, of those, energy sources more and more. Otherwise, we simply won't get there.
You guys are absolutely right. I mean, that conversation that's being had at the moment about petrol prices is about price. It's not about an ethical change to an alternative. It's about it's costing me more to get to work every day. So it's an economic reality. Desire, did you want to talk to us a little bit more about your PhD and where you're at with that and how it's progressing?
So I guess I've already talked about the core issues about my research. Maybe I'll briefly talk about what we have done. We essentially started with looking at the concept of criticality, which is the subject or the field of study that is used to classify minerals as critical or strategic. And we're trying to understand how the assessments affect global cooperation. So you have this field of study, which is purely technical and mathematical. This is mathematical modeling that is done. But how does it affect cooperation? So then from there, we went on to sort of try and understand how experts globally interpreting it. So because there is a very small population, a group of experts that are actually doing the modeling, and then there is a larger group of people that sort of interpret the findings in their own way in terms of what does criticality mean to them. So there we were interviewing experts. So we interviewed about 40 experts internationally across around 20 countries. And then we started looking at critical minerals submissions, like I was talking about the US. So we looked at Australian submissions, South African submissions, US submissions, and European Union submissions. So from there, we're simply trying to understand what does criticality mean for these countries, and what does criticality mean from a mineral producing country perspective and from a mineral consuming country perspective. And then we go back to what I was saying earlier.
So based on all of your research, is there an appetite, I guess, for dare I say, a global policy change and I guess a global policy on the categorization of criticality, even though it's quite country specific. Is there any way of finding a way to collaborate and for the betterment of a global outcome? And will your report have an influence on this sort of policy?
Hopefully, yes. Any PhD student would say that their research is going to have impact. But I wouldn't say there is appetite to have criticality assessments at an international scale. What you have is essentially clubs trying to harmonize their criticality assessments. For instance, the European Union trying to see what are critical minerals for the Union, or you have the Mineral Supply Partnership, which is a partnership between the US and most Western countries, trying to see what are our critical minerals from our perspective, or you have the BRICS. China and its partners trying to sort of assess what are critical minerals from our perspective. The problem with these clubs is that there is no homogeneity. If you're looking at, for example, the MSP, you have Australia and Canada. These are mineral producing countries. They are not consumers. So their interests are totally different from US interests. And this is where I was getting sort of pushback from experts I was interviewing from Canada and Australia, saying, again, the finance problem, that we have been promised finance from our Western partners, but in reality, it's just talk and talk and talk all over again. But we really don't see the outcome of these promises. So and then if you look at BRICS again, China, we in our analysis, we actually don't classify it as we classify it as both a mineral producer and a mineral consuming country. So then China and Zimbabwe, you can't look at them from the same perspective. Or Zimbabwe is not in BRICS, of course, but say China and South Africa, you can't look at them from the same perspective because they have totally different interests, because China is now the biggest consumer of critical minerals. So the question of whether, that's why in terms of what we propose is we need one inclusive platform that can be able to sort of harmonize interests from the perspective of mineral producing and mineral consuming countries, not from the perspectives of alliances or geopolitical alliance, and then from the perspectives of developing countries or high income countries. So there has been talk about having the WTO or a WTO platform, and this is something that we also recommend, that we need a critical minerals agreement within the WTO, where we're going to have a technocratic panel that is going to come up with the scientific evidence-based ESG panels I was talking about, the rules that we need for the game, right? And then they are going to because we can't also have rules, like blanketed rules, because where South Africa is as a mineral producer is not the same place as China is in terms of what's realistic in terms of ESG in South Africa is not the same with what's realistic in China. So what we need is sort of a tiered system where it's you graduate from one stage to another, and all these countries need to sort of come up with long-term plans that we are here by 2050 in terms of ESG we want to be here, and this is what we're going to put in place to get there. And as they graduate from one point to another, then they unlock finance, because the problem with finance currently is that no one wants to finance where there is high ESG risk. But then the problem is it becomes a chicken and egg dilemma, because these countries cannot address the high ESG problems that they have because they don't have finance. They need the finance to address that. But then financiers are saying, we want you to address that. So sort of having that tiered system helps them to say, we are here, but our next step is going to be this. The moment they unlock that step, then they also unlock finance. But currently, I would say we don't necessarily have a platform to do these critical assessments, criticality assessments on a global scale. Neither do we have a platform to have this bargaining to take place.
This is going to be a very interesting space to watch, especially the next 4 years as we go to 2030. I have a question for both of you. How hopeful are you that Australia and the rest of the world can transition to green energy and achieve net zero?
Yeah, I think I'm really hopeful. Yeah, in as much as I acknowledge that we have been struggling, I think one of the reasons why I'm hopeful is because I've been working with the GreenTech Hub, and I've seen the kind of innovations that are coming out there, and the zeal that innovators have. So I know that maybe for me the concern is whether we're going to get the we're going to get the transition, but is whether we're going to produce the critical minerals required for these technologies, for these innovations, and mobilize the finance requires to demonstrate, pilot, and deploy these technologies at the scale that we can meet our net zero targets by 2050. If we are able to, do this, provide the scientific evidence required, make sure that, our solutions are economical and technical feasible, then it becomes a question of political will. And I guess, again, with the right information, citizens globally in Australia or elsewhere will be will be empowered to sort of encourage governments and politicians to sort of move towards the right energy transition policies.
Yeah, I couldn't agree more. I think to a certain extent the ingenuity is the easy bit, and I think that human ingenuity, human innovation, the technologies that we need, in many cases are already there. What we need is the systems change and the systems to be able to accommodate and adopt, to scale those sorts of technologies. And I guess, being humans, we're pretty impatient with systems. We sort of think that we can change things and steer the ship very quickly. The reality is that whether we're talking about energy, we're about to embark on a low carbon construction materials challenge, innovation challenge. We're talking about trying to disrupt concrete. It's been around for a while, and it's a big ship to turn. So it's there's really, I guess, there's a need to sort of really be thinking about the systems level, I guess, innovations that are needed, and a lot of that comes down to human capital. I think that as we sort of move into the next decade, you sort of see really traditional, low risk, tolerant, incumbent systems start to kind of really shift in the way that they adopt new and novel technologies and new and novel solutions. I mean, the classic one for me around that is just looking at how energy transition. The network operators are some of the most conservative. There's no tolerance for failure in that industry whatsoever. They've kind of moved through the bargaining, denial stages of grief. Now they're out looking for what the solution looks like, and you see network operators being some of the people that are really seeking to accommodate. I think construction's as a ways behind that. I think that there's different sectors that are in various stages of that transition, but ultimately the momentum and the inertia is starting to shift, and there's real opportunity in that space.
That's a really hopeful tone to finish up on there, Jason. What I would like to know from either of you or both of you is it also a generational thing within industry too? Because with younger professionals coming through, they're a generation that stand to lose a lot more, really, if we don't work this stuff out.
Absolutely. I think, there's a different skill set as well. You've just got to look at the opportunities that AI, it's a challenge for in climate, certainly around energy consumption, but it also opens up a myriad of new solutions to intractable problems, and it might change the demand curve on a whole bunch of the things we need to actually sort of, I guess, realise our net zero commitments and ultimately a more sustainable future. If you're a later stage in your career, you're probably not the people that are going to be necessarily utilising those tools to their fullest extent. So I do think, as particularly given the tech shift that's coming, and just, I guess, the assumption of what normal looks like. Someone said to me a long time ago that the extraordinary becomes normal very quickly, and I think we're seeing that Even if you look at just the proliferation of rooftop solar or proliferation of the percentage of renewables on the grid or the adoption of battery technologies, electrification of vehicles, 10 years ago to see an EV on the road was absolutely exceptional. Now it's normal, and it's increasingly going to actually become the majority over time. I think those shifts really do mean that, generationally, the normal for the Curtin students of today is very, very different to the normal of the Curtin students 30 years ago.
Thank you, Jason and Desire, for your time. It's been really interesting and we appreciate all the insights.
Absolute pleasure.
Thank you.
Thank you.
And we have another one lined up for you as well. Our next episode is on circular economy and waste innovation, so make sure you tune in.
You've been listening to The Future Of, a podcast recorded on Wajak Boojar and powered by Curtin University. If you've enjoyed this episode, please share it. And if you want to hear from more experts, stay up to date by following us on your favourite podcast app. Bye for now.